In the last video, we discussed about Section 128 of the Companies Act, which provides for the books of accounts that a company is required to maintain. In this video, we will be discussing Section 129 of the Companies Act, which provides for the preparation and maintenance of financial statement by a company. Subsection 40 of Section 2 provides for the definition of financial statement, which includes balance sheet, profit and loss account or income and expenditure account in case of a no-profit organization, cash flow statement, and the explanatory notes which are annexed to or which may form part of the financial statements. Now, small companies, one-person companies, and dormant companies may not require to prepare cash flow statement. Financial statements are required to be prepared for every financial year, and it has to be as per Schedule 3 of the Companies Act. Subsection 41 of Section 2 provides for the definition of financial year. It is an year which ends on 31st March of every year. For new companies, the 31st March of the following year should be the date of closure of the first financial year. So, if my company is incorporated on 1st January 2019, my first financial year will close on 31st March 2020. If my company is incorporated on 1st December 2019, then my first financial year will close on 31st March 2020. If the company is incorporated on 2nd January 2020, the first financial year will close on 31st March 2021. Now, the Schedule 3 of Companies Act has two divisions. The Division 1 provides for the Companies Accounting Standards Rules 2006. That is, it provides for the provisions with respect to the preparation of accounts or preparation of financial statements on non-Ind AS basis. The Division 2 provides for the company's Indian Accounting Standards Rules 2015. That is, the provisions with respect to the preparation of financial statements on Ind AS basis. Subsection 1 provides for the true and fair view. That is, the financial statement should provide for a true and fair view of the financial position of the company, and it should be in compliance with the accounting standards which are given in Section 133 of the Act. Now, there are certain companies which have been exempted from the provisions of Section 129. So, these companies are insurance companies, banking companies, companies which are engaged in generation and distribution of electricity, or any other such class of companies which has been provided for the manner for preparation of their financial statements as per the specific governing law. Further, since these companies prepare their financial statements according to specific governing laws, they might be restricted from disclosing all the items of financial importance in their financial statement. So, such non-disclosure shall not be treated as violation of no true and fair value as per subsection 1. Subsection 2 of this section provides for the laying of financial statements by the Board of Directors of the company before the shareholders at every annual general meeting of the company. Subsection 3 of Section 129 provides for the consolidation of financial statements by a company in addition to the preparation of its standalone financial statements. So, if a company has one or more subsidiary or associate companies, it is required to prepare a consolidated financial statement of the company and all such subsidiaries and associates in addition to its standalone financial statements. Just like the standalone financial statements are required to be laid before the shareholders of the company by the Board of Directors in every annual general meeting, the consolidated financial statements are also required to be laid before the shareholders at every annual general meeting. In addition to such consolidated financial statements, a statement containing salient features of the subsidiary or the associate company is also required to be provided before the shareholders in Form AOC 1. The consolidation of accounts should be carried on in the manner as per Schedule 3 of the Companies Act and the applicable accounting standards, which is Accounting Standard 21 and 23. However, in case accounting standard does not require consolidation of accounts, Such consolidation should be carried on as per the provisions of Schedule 3 of the Companies Act. For example, if a company has become a subsidiary of a company for a temporary period, our Accounting Standard 21 does not require for the consolidation of accounts of such company. However, Companies Act 2013 does require for the consolidation of such accounts. So, the consolidation is required to be carried on as per the provisions of Schedule 3 in such cases. The other provisions with respect to the preparation, adoption and audit of the consolidated accounts shall be same as the standalone financial statements. This has been provided in subsection 4 of section 129. Now there are certain companies which have been exempted from the preparation of consolidated financial statements. The first condition for such exemption has 3 more conditions. If a company comply with all these 3 conditions, it is exempted from the preparation of consolidated financial statements. The first condition is the company which is required to prepare the consolidated financial statement is itself a wholly owned subsidiary or a partial subsidiary company of such other company. In case it is a partial subsidiary of another company, then such company is required to send an intimation to other remaining members of the company that the company is not willing to prepare consolidated financial statements, and it should keep a proof of such intimation with itself. Further, it should also obtain a no objection from all such remaining shareholders with respect to non-preparation of consolidated financial statements. The second condition is such company should not be a listed company or under other process of listing, whether in India or abroad. Third condition is that the immediate holding or ultimate holding company of such company is preparing consolidated financial statements and is filing the same with the registrar of the company. Let us take an example. A Limited has a holding company B Limited and a subsidiary company C Limited. Then, if B Limited is preparing the consolidated financial statements as per the applicable accounting standards and is filing the same with the registrar of companies, then A Limited is not required to prepare and file consolidated financial statement with respect to C Limited. The second condition says that for a period commencing on or after 1st April 2014, the companies having subsidiaries incorporated outside India are not required to prepare consolidated financial statements. So, this condition is applicable for the period commencing on or after 1st April 2014 only. For example, a company A Private Limited has a subsidiary B Limited incorporated in Canada. Then A Private Limited is not required to prepare consolidated financial statement with respect to B Limited for the period beginning from 1st April 2014 onwards. So for the period before 2014, yes, it is required to prepare the consolidated financial statement, but after 1st April 2014, it is not required. Now, what if the company has deviated from the accounting standards while preparing its financial statements? The treatment has been provided in subsection 5 of the section 129. Such company is required to disclose such deviation in its financial statements, the reasons for such deviation, and if there is any financial effect of the same. Let us take an example. Revenue recognition as per accounting standard 7. It says that revenue should be recognized when the possession is transferred to the buyer. Now A Limited sold some goods in the last week of March. While the goods were in still transit in the first week of April, the buyer cancelled the order. Now the company should record the reversal of such order in the period ending March itself. However, the company did not reverse the order in the March but in the following financial year. So there is a deviation from the accounting standard which says that such reversal should have been accounted for in the period ending March itself. So now the company would be required to provide for the disclosure in financial statement, the reason for such deviation and the financial effect thereof. Now subsection 6 provides for certain special powers to the central government with respect to the preparation of financial statements. It provides that the central government may, in the public interest, exempt certain class or classes of companies from the provisions of this section and the corresponding rules that we have studied so far. This it may do on its own or on an application by class or classes of companies. So this is a special power given to central government to exempt any further class of companies in addition to the ones which have already been exempted. Subsection 7 provides for the penal provisions with respect to non-compliance of the provisions of section 129 with respect to the preparation of financial statements by a company. It provides for the defaulting persons for this particular section and the penalties that can be levied thereof. In the defaulting persons, it has included the managing director, the chief financial officer, the whole-time director for finance, or any other person who has been charged by the board with the responsibility of preparing the financial statements. In cases where no such officer exists, all the directors of the company shall be considered as the defaulting persons. Talking about the penalties, penalties may include imprisonment for up to an year or a fine not less than an amount of rupees 50,000 but which can be extended to rupees 5 lakhs or both imprisonment and fine. So this is all about section 129 of the Companies Act, which provides for the preparation of financial statements by a company. Thank you for watching. Do like and subscribe. You may also contact me at aditijain241@gmail.com for any of your queries. Thank you.